Good morning, everybody, and welcome to 2016. I'm Lee Seiler with Seiler Wealth Management. This is my first blog of the new year, and wow, what a start to the new year. Yesterday, the markets had their worst day in 84 years. Okay, and there was a lot of news out there and a lot of what I call noise. Okay, here's the thing, folks. A lot what happened yesterday, and most everything that happened yesterday, was because of what happened in China. And China, of course, announced there could be more of a slowdown than what they expected. The Chinese markets took a hit of 7%. And of course, they sneeze, we catch the cold. So our stocks took a hit, not to mention, a lot of profit taking. A lot of people that had stocks that performed extremely well last year wanted to wait, because if they can wait to sell till the first trading day of the new year, they can defer paying those taxes out till April of 2017. So that was a strategy, especially on what they call the FANG stocks. The FANG, like the fang of a vampire, F-A-N-G. And that term was thrown around yesterday, and I watched CNBC all day long. And what annoys me with CNBC is the novice investor sometimes struggles watching CNBC. They don't know the terminology. So what I try to do in my blogs is not only give you intelligent, strong information and good strategies for a solid investment future, but also try and give you some of that slang terminology that you may not know, but the Wall Street guys or the investment advisors know. All right, but FANG, that was thrown out there all day. I heard it at least 10, 12 times yesterday. They were talking about the FANG stocks are down. The FANG stocks were the best performers last year. But here's what that means. FANG is an acronym for Facebook, Amazon, Netflix, and Google. And oftentimes they were part of the five horsemen, because when you throw Apple in there, that were the five horsemen for the last few years. But those FANG stocks, those four stocks, really performed extremely well last year. And when you look at something like an Amazon, which was down 5.7% yesterday alone, that one I don't believe had any type of correction last year. That stock absolutely just accelerated the upside, went parabolic, and didn't look back. So what are you going to do? All right, you're going to hold off and take your profits, because sometimes if you're in the highest tax bracket, you're paying 39% federal. If you held that stock less than 1 year, so you pay your 39% ordinary income tax. If you were smart enough and you held it for 12 months, guess what? You pay capital gains, which is at 20%. But you'd rather go ahead and take a 7%, or in this case, a 5.7% hit on Amazon, and defer those taxes over the next 14 months. So the FANG stocks took a hit yesterday. Yes, the markets had their worst day in 84 years. I think that's all noise. I think it happens, okay? We didn't have a great year last year. The market was bad. The bond market was bad. Commodities were bad. So there really was no place to hide. So overall, your investment portfolios probably didn't do so great last year. We're hoping you stayed around up to down a few points, up to down 5 points would be okay. But the bottom line is, you have to look at what's going on this year. I happen to think those FANG stocks will probably do okay this year, because they have the best earnings power, and the market's looking for earnings. Yesterday, one of the big brokerage firms, they downgraded their estimates for gross domestic product. Gross domestic product is the growth of our economy, they call it. It's also an acronym for that is GDP. They said they believe, and they lowered their first quarter GDP to 1%. So I want to also explain, when they say, hey, second quarter GDP is 1%, or first quarter GDP is 1.5%, what they mean is, at that point in the year, the whole year's economy is tracking at 1%. So they're not saying, hey, first quarter is going to grow at 1%, and say, okay, well, times 4, that means we're going to grow at 4% this year. No. What that means is we're tracking first quarter, and that's not good. What that says is, we believe that last year GDP, we'll get the final numbers, but we're probably tracking around 2% growth for the whole year. Our economy grew 2%. And one of the major brokerage firms is saying, we think we're tracking GDP first quarter 1%. Okay, that's not good. So what does that mean? You got to look for stocks that have the earnings power and are trading at reasonable multiples. Now, I'm not saying Amazon trades at a reasonable multiple, but they have that growth rate. They are just a machine. Facebook has a high growth rate. Google, which is now called, by the way, Alphabet, all right, Don't like it, but it's called Alphabet. We're going to call Google forever. And Netflix. They track a pretty good growth rate. Now, Netflix got downgraded, and I want to talk about upgrades and downgrades by brokerage firms for a minute. Brokerage firms do and create upgrades and downgrades. It used to be a lot worse, but for transactions. They want to create transactions for their brokerage firms because it's Goldman Sachs, it's Morgan Stanley, it's Merrill, it's Bank of America, it's SunTrust, it's Wells Fargo. All of them have research departments. And if your research guy is sitting around just twirling his thumbs, he's not justifying his big salary. So they got to come up with news. And if they say, hey, this little XYZ biotech stock that has $3 million in revenue, we think that's a buy, that's not going to create enough activity for the brokerage firms to make money. I'm sorry, folks, but that's what it's all about. That's why I'm independent. That's why I don't have the research department is me. I don't sell my research. Okay, I use it. Oh wow, I use it for my clients' benefit. Okay, so that being said, there's something called the January effect. Okay, we didn't start out that great, but the January effect is this: as goes January, goes the rest of the year. Okay, that's correct, and that probably is accurate 70% of the time. But we still have the rest of the month. And I tend to think that the sell-off is going to last today, maybe tomorrow, but I think we're going to start bottoming out because we have dropped significantly, and we take into consideration last trading days of last year, and then this year, we've got a little bit of a nice little relief to get started buying things at lower prices. You want to own stocks. If you're going to buy individual stocks, folks, you want to own the ones that you want to be in business with. Do you want to be in business with a Facebook? Do you think there is potential there? Do you think they're growing? Yes. Do I think their growth is going to slow? Yes. You have 1 billion users. Can they go to 2 billion? I don't know. I don't think so, not in a short period of time. You want to own things that trade at a very cheap multiply, a multiple. Like, for example, Apple trades at 9-10 times this year's estimated earnings. That is ridiculously cheap relative to the market. You may have an opportunity to own Apple here in the low 100s, which you may not get again. So there are things like that we like to own. Asset allocation is the key, all right? And that's what we're doing. And we are loaded with appointments this week. Thank you very much for people coming in and saying, please look at my 401k. Please look at my IRAs. What can we do to improve performance? So we're doing that. I do not have today's Tuesday, do not have any more appointments until next week available. So please contact me. That's fine. We'll get you scheduling for next week. Also, I've been negligent in giving out cruises. I've had them. I've just been really busy. And what I'm going to do is I actually went back and looked at all the shares and all of our likes on these videos. And I've given, for one, if you did a share one time, I gave you 2 entries. For a like, 1 entry. These are cruises to the Bahamas. All you have to pay is the port tax. The cruise is free. 2 days, 2 people for the Bahamas. And I've got an app, huge bowl of names. I took the time seriously yesterday afternoon. And I'm going to pull out 4 names. Okay, I'm going to pull out 4 names, give away 2 people, 2 night cruises. And I'm not going to even look. It's a first name. I'm not going to give last names. EDS is a winner. Okay, I've got 3 more. Let's go. Wayne W. Wayne W. is a winner, and actually they've won before, so they keep sharing, and I appreciate it. So you share this video, you have the chance to win another cruise. I'll do it on Thursday. Lewis M. I will contact these people. Excuse me. You are a winner. And let's move forward. Karen E. You are a winner. Thank you very much, you guys, for sharing my video, liking my video. Silo Wealth Management. Check out our website. That's silowealth.com or stockdr.com. I'm here for you if you need any help. You know how to contact me. Everybody have a fantastic day. I think today is going to be a little bit on the downside. A couple things you want to look at. We did rebound yesterday. We're down over 400 points. We closed to down below 300 points. Apple, very interesting, down 3-4 points earlier in the day. Closed almost positive. That's a good sign. I think that we have another day of washout, and we'll see some things turn around here. And I'm here to help. You guys have a great day. I'm Lee Seiler. My newsletter will be out later this afternoon. You can sign up for the newsletter on my website. It'll go directly to your inbox, or just contact us and we'll forward it to you. All right, guys, have a great day. Take care. Bye-bye.